Hi, everyone. Welcome to TechTO Quick Takes. I'm your host, Alex Reilly. And here's what's been making news in the last month or so in Canadian tech. A KOHO raised big this month, and we'll weigh in on how it came together and what success looks like, and just takeaways other founders can utilize. EvenUp set to hit unicorn status after their raise. So we'll also get into more of how that came together. And Fable's raise puts accessibility at the forefront of tech. We'll definitely pull out some more talking points from there, but as always, Alex Norman's here to break it down. Hi, Alex.
Hey, Alex, how you doing?
Good. It's been a really long time since we've done one of these, so I'm excited to be back and excited to be talking about rounds coming together. It's awesome.
Well, it feels like it's summer, so I don't think it's been that long. It's 20, it's mid-October, it's 20 in Toronto, 20 in Vancouver, I think 20 in Montreal.
It's
So,
Yeah, it's awesome. We were just talking about how I was out all day yesterday, just enjoying the weather. Today is also beautiful weather. So it feels like summer. So we can just say it was like a brief hiatus, but
well,
we're
and
back.
and like it being hot right now, it looks like fundraising's happening again. So the
Yes.
markets are hitting up at least late stage. I think A rounds are still a bit tight, and we can talk about that if you want to. But we're going to talk about three relatively large rounds in the next few
Yes.
minutes.
Yeah. And again, like you kind of again, perfect transition. Yeah, the fundraising landscape has been hot, and we talk about how it's been something we don't always hear, like large rounds coming together. It's been something we've talked about the fluctuating market kind of all year. So this is great. First one that I have on the docket for us to discuss is KOHO. So huge round came together earlier this month. So maybe just share the news there before we get into more.
Also, headlines $190 million Canadian. Let's break that down because this is one of those headlines that messes two different types of assets together.
Mhm.
First, either way, it's big. It's a 40 million equity financing led by propeller growth with participation from current investors, Drive Capital, TTV Capital, BDC Capital, and Rockefeller Capital, which is founded by oil baron John D. Rockefeller,
Mhm.
who's a new investor. Then there's 150 million in debt. So some new equity capital, a lot more access to debt.
Right. And again, just from, an investor perspective, I want to throw this out at you. Just how does this come together?
Well, like getting around, there's a supply and demand. And I
Mhm.
think in this case, uh, KOHO is coming from a different place than lots of fintechs. They have, we last looked at the numbers, we've talked about past raises. They've had strong, apparently have strong unit economics, strong growth, driven by being able to cross-sell into their customers, acquire customers relatively effectively. And I think what's happened here is they said they're going to get a banking license. And that's a long and expensive process. So I think they've continued to perform well. And they're down this process to become a bank, which has a huge amount of benefits. We can talk about that in a minute.
Mhm.
And so they have need for additional capital and equity. So there was obviously demand for this. So they raised 40 million. And they were lending some of the debt and some of the products were being financed off their balance sheet. So here they got 150 million of debt with the idea that the cost of borrowing is going to fall because as they become a bank and to provide services to their clients, they rather have a facility in place to lend against that and make a margin versus them using expensive equity. So I think in this case, this big round, which is both debt and equity, came together because of the path towards becoming a bank,
Mhm.
and they could proactively raise more equity to allow them to get, to meet some requirements and to fund some of that. And they got a lot of debt, so they can offer more products that cost effectively to their customers.
Right. And one of the spaces we also have kind of touched on like a lot of times throughout the course of the years, like we don't hear a lot of fintech rounds coming together. Like that seems to be the space that we're not hearing as much. Like obviously it's prominently a lot of AI and AI startups that are raising and that we're hearing about and talking about. So what do you think this means for the space going forward?
I think it's hard to say. Let's look at what's going on with KOHO a bit more. KOHO's got over the hump. It is an at scale company. It is financial. It's built off, as most fintechs do, is they build off other people's platforms. They white label other solutions. They have use a BaaS, and they have to get the scale to make money. KOHO got there and are now in the process of becoming a bank. So that will allow them to take more control of the services they offer, allow them to rely less on other people, and
Hmm.
improve their margins. So I think that is why you're seeing good news here with KOHO. I think this flip side is we're not seeing a lot in, let's say, call it consumer fintech right now, because those underlying suppliers, those middlemen that give you access to bank as a service, that give you access to embedded products, have had shown trouble scaling themselves, are not as available in Canada. So the ability for you to start a net new company relying on third parties to offer a better interface or to go after a different customer channel or group is weak now, and it's provides a significant risk. So financing a consumer fintech company relying on third parties, I think, is much harder than it was 36 months ago and continues to be hard. I think if you're a fintech that's not serving that, so if you're, let's say, serving a business to business or having a new model or a strong scale you are raising, you may not have the need to announce those rounds as you did in the past, because there's less competition for talent, there's less competition from customers. So just by being in existence, you have a competitive advantage you didn't have 36 months ago. My guess is outside of consumer fintech space, you're going to see a lot more announcements of rounds in the next 12 to 18 months.
Okay. And just given like the space we're talking about, obviously like user trust and like consumer trust is a huge like fixture of the business and how they operate and things like that. So what is KOHO maybe doing that other people can learn from in terms of standing out with just maintaining like user trust and customer trust and things like that?
I think there's two things or three things. One is raising these large financing amounts, telling you who the investors are. Like, I love there's a call out to Rockefeller Capital because people know who Rockefeller is,
Yep.
even though maybe the capital's not big. So I think for consumers to have lots of articles saying, hey, we have a lot of money and we're backed by deep pockets is a huge advantage. So my money's safe with them. And I think you've seen Wealthsimple do this well over time.
Yep.
I think second of all is having products that work efficiently, not having a problem. Like it's one thing to be on a social media app that goes down for a few minutes. You need your financial fintech products to work smoothly, be significantly better than the traditional incumbents,
Yep.
and just provide better access, better products, and just feel like they're great. I think the third thing is it goes back to just, it's PR. It's making sure that the news out there is generally positive and shows that you have momentum. So and it
Mhm.
ties back to the first. And I think in the consumer space, perception's reality, and then its experience is reality.
VC perspective question for you here, but obviously product evolution. This is completely part of the life cycle of building anything and obviously evolving your product to the market. So what takeaways would you have, just even not necessarily based on this, you can pull from this, but also just in general from your perspective, like how are you able to like ensure product evolution, but also like aligning that with the needs of your customers, especially when you're scaling rapidly after like large funding rounds like this? Like, what is your advice?
Well, I think you can't evolve a product if you don't listen to your customers.
Hmm.
So let's stick with fintech and consumer fintech as an example. Both KOHO and Wealthsimple started with one product,
Hmm.
right? That was their wedge product, which they went to market with. They said, here's why we're best in class. Here's the consumers we're going after. And they expanded in two ways. One is they said, okay, now that you're using us for this, KOHO wanted to become your main bank, your main consumer bank for your day-to-day transactions, where you put your money. So they started offering products that either were on par with the current financial institutions you might be using, or offered something they did, either quicker access, lower fees. And so it was understanding how with the initial product, you can go to adjacent products and get more of your consumer wallet. The second thing they've done is they go, what other consumers can we go after? So I think it's understanding why your consumers are using you, what products they use, how you can offer it better, and how can you make it more seamless and what the advantages you are. It could be pricing, it could be access, it could be the actual product, it could, and so I think it's really understanding your customer and how he or she banks. In this case, or uses financial tools, and then providing one that's not a leap away, and it's also one that you can do cost effectively or make a margin on. So it's a bit of a non-answer because
It's okay.
it's not. I haven't gone into strong details, but I think any company that's expanding the products, it really understands the day-to-day usage of their product by the customer and what else they could serve without making a big leap and do it better, best in class.
Right. And I guess like I'll just end it on, I know there was like a few great takeaways just from your last answer, but is there any other takeaways you want to share? And also if there's anything I maybe didn't mention about this round that you want to just weigh in on, opportunity to do so.
So I think one thing that's being shown here by KOHO is the evolution of a company. As it's, lots of software companies are built, or tech companies are built using a lot of APIs and third-party tools. And that makes sense. You should have one thing you're best in class in, and then everything else should be outsourced. I think as you know your customer better and as you scale, you might decide it's time to get rid of the third parties.
Okay.
Because
Yep.
either you can do it more cost effective and pass some of that savings or keep the gross margin, or you can build a better product because you have more control over it. And so
Yeah.
what you've seen with KOHO, their desire to go bank is an expensive and time-wise and money-wise endeavor, but they believe they're going to have a much better product and be able to compete much better by doing that. And I think you see this, maybe not by getting a banking license, but you might see this by like Uber, when they scaled up, they stopped using Twilio and built that product in-house. So eventually, it makes sense early on to focus on what makes you unique and best, but over time, companies go up the vertical stack and get more integrated. And I think that's something that's, getting that right is something that many companies find a hard time doing, and it's not, and you don't have to think about that when you launch your company, but as you scale, there's a lot of value to be taking control more and more of the stack. What you see with KOHO and with Wealthsimple is, nothing happens overnight, but now let's say a decade into both these companies, and they're doing the unthinkable. Both of them are becoming legitimate financial institutions for consumers in Canada for what's historically been an oligopoly of 5 banks, maybe, depending on how you count it. And now you've got 2 new entrants that are trying to make that 7.
Yeah, they're becoming real competitors in the space for sure.
Yeah.
Great takeaways. I think just even for founders, like beyond the point of building, I think that's like a great identifier as well. Just moving things along. So EvenUp, again, making headlines very recently, their recent round, setting them up as a potential unicorn. And I know, we throw this term around like not so often, but it's interesting to talk about and see that, other people are throwing this around as well. So what's the news there, and like what is setting them apart right now?
So 2 different things. The news is they announced around that they raised $135 million, led by Bain, with many other firms participating at over $1 billion valuation. So, and that's US, so proper unicorn, large round. What's setting them apart? I
Yeah.
think is they're a clear leader in the personal injury law space for software. You look at, they have thousands of users. They've been adding products and owning more and more of the, like, tech stack for their clients, and they've, if you talk to anyone in the industry, they've had a huge impact on an industry, a subset of the industry that's very slow to adopt technology, and they're making a huge difference in how lawyers are, for lack of a better word, automating or using technology in their business, and and you're seeing results in the numbers, which is why people are excited to back this company.
Right. And again, like from your perspective and what you've been maybe like seeing or not seeing, and just maybe if you can weigh in on this, but what are some of the challenges that you have been noticing in terms of, because again, it's like utilizing AI, right, for all of these processes and obviously efficiency when it comes to like the legal aspect of all of this work. So what are the challenges that you're seeing, like utilizing AI for the
Okay,
decision
so
making?
let's go with EvenUp's 2 core processes
Yeah.
today. One is helping personal injury lawyers determine what the right price to settle a case at and why. And then once a case is agreed upon, is creating what's called a demand letter. So that'd be like a 300 to 500 page document, which is,
Yep.
okay, this is what we agreed to, and here's why. It needs to be a paralegal that does that. So let's break your question down a few things. What's
Sure.
the challenge of using AI? I think one of the big breakthroughs for EvenUp was understanding where they could get the data to start with. This is one where they found a unique way to access data that was publicly available and train their machine models. So that's the first thing. How do you get enough cases? And then the second thing is they got publicly available, and as they start scaling, one reason they have, I think, a scale advantage here is they're getting a bunch of information about cases that were settled outside, that got settled and then go to court. So first thing to do these to bring AI to provide insights into a case, you need to get a lot of data, and you need to get a lot of data to inform it. And I think that's what EvenUp found out. The original data has got additional data that's not publicly available. I think the second thing is, that data is just, I wouldn't say it's making legal decision making. It's not solving a case, but it's telling these lawyers, here's based on other settlements what this case could be worth and why. And if you look at personal injury lawyers, typically they've been overwhelmed with the demand on their time. So let's make more informed decisions and get fairer settlements for our clients. So all of a sudden, they might have an offer for, let's say, X, but then EvenUp says, well, this is actually worth X plus 30%, and here's why.
Yeah.
It enables lawyers to go back and help their clients get a fair settlement. And then finally, if you look at the decision, then they create this decision letter, which could be like paralegal working on for several weeks.
Mm-hmm.
Now you got AI doing it, with a human in the loop. It goes to a few days, and the case gets settled, money gets done faster. So I think, first is getting the right data. Second of all is understanding the workflow of your customer, and then third is it's bringing more power to the individuals that are pursuing these cases. I think I think one of the things is you're doing less time. People are spending less time doing the manual processing and the repetitive task because the AI is automating that.
Exactly. And also what I'm hearing too is like less time, which means potentially taking on more cases, right? And having more that are able to get out the door. So that's, again, also a huge benefit. So asking you to look ahead a little bit. And I know these questions are tough to answer, but just, maybe even what you're looking ahead, we won't say maybe even 5 years, just like next year or two or something like that. But with just EvenUp as an example, just raising significant funding, how do you see AI transforming like the broader legal landscape over, we'll say, the next 1 to 2 years?
So I'm going to take a step back, because legal can be broken into many different verticals and tasks.
Yeah.
And I'm going to actually go even further high level. I'm going to go professional services.
Okay.
So historically, selling to professional services software was possible, but they were laggards, and it was hard to understand how they help their business. I think what you're seeing with LLMs, and generally legal's at the forefront of this, but if you look at any service business, you're seeing a large penetration and a quick adoption of LLMs and tools built for the industry. And I think what's happening here is most professional service jobs has become like 50 to 70% administrative, repetitive tasks. Lots of people think, okay, I'm going to be a consultant, I'm going to be a banker, I'm going to be a lawyer, I'm going to be, creative might not be the word, but I'm going to use my brain and challenge myself. And all of a sudden it's filling out forms, making a deck. And what's interesting here is that LLMs are finding ways to do repetitive administrative tasks and reduce the time spent on that. So either it's time you don't bill for, or it's time you don't enjoy. And so you're seeing adoption here quickly. I see stuff like accountants collecting the documents they need from their clients faster. And it sounds silly how much that takes 10% of your time. That's a really boring, shitty part of your job. So it's interesting. I see where AI transforming and getting adopted is either it's going to free people up to have more time to either just take time back or focus on time they only charge for, or maybe charge their clients less for like manual stuff, and more time to actually do the part where they actually fell in love with their craft, where they get to use their brain, figure out kind of stuff. So I think you're going to see that cross professional service, and I think that's where adoption is now. So what does that mean about the broader landscape? I think the roles and the way these companies function are going to be different. I think the biggest challenge and question I don't have an answer for is a lot, historically, a lot of stuff was paying your dues by doing the crap work.
Right.
And if that disappears because LLMs can do it, how else do we train, and what is a professional service firm look like because most of them have pyramids of partners and low, are making money off the time of the more redundant work.
Yeah.
And I don't have a view that. Maybe see more independent, maybe see trainings change, but I do think across all professional service firms, you're seeing rapid adoption of LLMs.
Right. I know that was a complex question. So that was a very good answer.
I don't know if that gave you a good answer, but
no, it did. I think that was a good way to look at it, like you said, from a more broader perspective versus just maybe like the legal space in general. But it was great. Are you seeing a recent surge in capital for legal tech? And if
Well,
so, kind of why?
legal tech's had that surge already. Um, Look, I think there's a few things going on.
Hmm.
Legal tech has historically been a laggard, so people didn't want to invest in it. Now you're seeing rapid adoption by customers, right? So the first thing is you see customers using it, revenue going up quickly. Anything that starts going like this, right up to the right, investors want to look at. I
Yep.
think the second thing is it's not only happening faster, but you're seeing the amount being spent by either lawyers or any other professional service firm to be much higher than expected. So the markets look a lot bigger, and it's being coupled with a proven ROI, right? So it's not like someone says, like, "Hey, I'm going to pay $5,000 a year for the software." It's creating $50,000 in value. So when you see something being adapted rapidly, growing quickly, and providing ROI, investors want to make investments in that space. I would argue that legal tech feels like it's a bit done. It went from being an industry where no one wanted to touch 4 years ago to now there's probably, I was looking at a legal map, there's probably 300 legal tech companies, if not 500 legal tech companies that are funded, well funded. So it's now very competitive. Where if I'm a founder, and this maybe gets into a takeaway for the community, is you want to be at the forefront when an industry is not validated and when it's hard to raise capital. Because once it starts easy to raise capital, when it's validated, a lot of people are pursuing it. And now you have going to have more money, which means more talent, more marketing expenses, more noise
Yeah.
to actually have that initial success. So like as I said, I think the water professional service space looks interesting. I feel like the legal tech is really crowded right now.
Okay. And well, and we just heard about Leo recently. Just
Well, I'd say Clio is more an old school legal tech that's now
okay.
using AI to benefit from its distribution.
Yeah,
So
yeah,
it can plug it, but like,
for
and I
sure.
think again, that's Clio's a perfect example. People didn't want to
Yep.
back legal tech. Despite that, they've built a massive business in a space that was relatively slow to adopt, right?
Hmm.
So like they're at, let's say, I think it was 200 million or 300 million. I think someone will say that ballpark, but that's
Yeah.
14 years. Um, some of these AI companies might be there in 6, 7 years. That shows you the difference in rapid adoption. But Clio has distribution, owns a lot of is an operating system for a lot of um, small legal firms. So I think they're in a really good position to benefit from this. But like,
Yeah.
if I was looking at professional service, I'm like, what professional service firms have not adopted tech and may benefit from the tech? And I think the other thing that's changed is the use of, I think there's a lot of tools that sold data, but now you can get, if you can find a unique data source and figure out how to train these models and build into workflow, I think that's where opportunities are.
Right. So you do think AI is playing a pretty central role in all of this?
Well, I think AI is playing a central role in all the money, everything right now.
Yep.
And if you don't have an AI story, you're adding an AI story to it. Very
Right.
few companies are not adding an AI story. Now, is that right or wrong? That's a whole other question, and we could talk about that for an hour.
We could definitely. Just final takeaways. I know there's a ton from this, but yeah, any final thoughts?
Look, every industry looks like a bad place to be. When the money is flowing to place, it's almost too late. You want to find a place where you have a unique insight, and you don't want to follow the hotness. You want to be ahead of the hotness. So you
Hmm.
want to find a place where you have a unique problem that you think the timing is to solve right now. It's hard to raise money, and then once you get going, you're the one that's like I think EvenUp's a great position. They started 5 years ago, almost 5 years ago. No one wanted to back legal tech back then. Um, they've almost been at the forefront of validating the legal tech AI market. They're a unicorn status. A lot of other people are raising that first round of $15 million, much easier than EvenUp could be. But I think they're in a pole position because of the data, they have the market awareness, they have capital, they have investors inside them. So just a reminder, you want to be at the forefront of industry. You don't want to be in the middle of industry when you start a company.
Awesome. And again, just want to move us along because one
Sure.
more headline I want to hit on. I am very inspired by what Fable's doing, and I think accessibility is just so prominent across not just tech, but obviously like all aspects of life, and something that we should be talking about more. So what they're doing in terms of accessibility in tech is, as I said, very inspiring. So their recent round, again, just shining a light on this space and what they're doing in terms of accessibility. So we'll start with what the news is. You can tell us that.
So they've raised $25 million B round led by Five Elms Capital. Um, Money will be put towards new teams and products around cognitive and hearing impairments and
Mhm.
AI expertise. The one thing that's not clear to me, how much is this primary for going right to the company, how much is secondary? Because I noticed on a couple of articles that some of the earlier investors have been bought out and are no longer on the board. So it sounds like it's a $25 million round. I don't know if the whole round's like, I think some of that's going to buy out previous investors, but they've raised a decent size round.
And again, like a bit of a maybe like deeper complex question for you here, but just how can other startups, just based on what Fable is doing in terms of balancing like innovation and inclusivity, especially that there is obviously a risk in AI unintentionally excluding people with disabilities, or just even in itself being something that's difficult to figure out or hard to understand. So how can other startups balance the innovation and inclusivity aspect with AI?
So let's be clear. I think the challenge, I think especially what Fable's trying to address and what people are saying is there's two challenges around AI inclusivity.
Yeah.
And one is, and they're both the same. There's the two sides of a coin, and you'll hear this often. It's basically the argument is AI is not inclusive in the data. Because the data it's provided is not inclusive data. So, and then the output and what it tells you to do or what decisions to make is not inclusive. So I'll give you an example away from Fable here, but like one of the big worries in finance using AI for finance historically has been, hey, there's lots of implicit decisions made before that were not inclusive, or the data historically has been biased. So when you train your model on that, who it makes a loan to is being trained. There's some subtle cues that picks up. Maybe it's based on postcode. Maybe it's based on something in a resume, which doesn't look like it's not inclusive, but implicitly there's a causation or correlation which causes it to be non-inclusive. So what Fable says is, hey, two things around that thing is one is there's a lack of data, especially for all the different ways let's get away from race and gender, but like, cognitive abilities or physical abilities that maybe historically that hasn't been provided with those people in mind. So the way output of an AI is not going to be favorable to them. And they'll even go further and they say, hey, the LLMs, the answers they provide are like right in the middle of the bell curve. So anyone that's further on the bell curve, however you measure that, is going to be precluded or excluded from those answers. So you have to figure out how to get as much data that represents the entire population as possible and it's not biased. And then when you get an answer from an LLM, which is looking at that and coming up with an answer, how can it make sure it represents the bell curve and not just the smack middle of that, the most common answer?
Mm-hmm. Just in terms of like the fundraise specifically, obviously when we see like a round come together within the space, it's signaling to people like a growing interest within that space, and in this case, accessibility driven tech. So do you think more VCs are going to be prioritizing this space? Are you looking into it more, perhaps?
I wouldn't say necessarily means people are looking at space, right? I think people start looking at space when they say, hey, there's a massive area. Let's go back to one, legal tech. EvenUp validated there's that legal companies are now going to use AI tech. And then you look at EvenUp, they're going after personal injury lawyers. Well, there's work compensation lawyers, there's family lawyers. So maybe this can be replicated for other parts of this industry, right? So that's, and oh yeah, it looks like it is happening there. So let's go get for all these different niches of this massive industry. Like you can say the same thing, travel. Hey, way back when people were booking flights online, maybe they'll book cruises. So let's book a cruise.com. So I think there's other plays where it's, hey, these are great numbers, but maybe this is not a huge industry. I feel like the accessibility. So let's go. Fable started off as a marketplace to get consultants and people that can help you validate your sites were inclusive. Let's go get experts. And let's marketplace. Now they're providing products that provide a dashboard and ratings, and they're providing tools to make it. And I think people might say, hey, Fable's on here. They can be the de facto place to ensure your website's accessible. Does that mean we're gonna finance 20 of these? I don't know. And my view is accessibility is important. I think what's driving the requirements here has been a change in regulations where your site has to be accessible, otherwise you can get sued. So I look at this I put this in the mark of this is like sort of like the SOC 2 certifications. These are driven by regulatory changes and societal changes. The question is, how many sites like this? I don't know if you need, but like I think this is something tool that lots of people will use, and if this is a clear winner, like they can take it, they can win and take away. There might be other players, but it's like I'll even go like the password protection site. You got one password and you got everyone else, right? So people gonna be financed, but I think this might be a place where the leader, de facto leader, keeps them having compounding advantage and more capital.
Okay. No, that's interesting perspective. Are you personally interested or being drawn to the space, maybe?
No, like I think there's going to be one or two winners here. I think it's a regulatory requirement in lots of cases. I don't think many companies wake up saying, "Hey, they have so many like." It's like Twilio, right? Twilio owns this space for letting you send SMSs. There's a couple other players in the market. I think this is a place that's going to be dominated by two or three players. And I think I'm late to the game, so it's not that I think it's a need. Most companies have to have accessible websites in many different ways, but I don't think there's going to be 50 players to invest in here.
Right. Okay. No, great answer. And just unless I missed anything and there's something else you want to dive into, just final takeaways for the community, especially in terms of maybe
Well,
even accessibility for their own products, customers.
just innocently, this goes back to when we started KOHO. How do you grow a company, right?
Yeah.
I think when I go back to when we first saw Fable, I think we've had them on TechTO before. I think we've talked about them before.
Yeah.
They were really a marketplace introducing experts that could go audit your site and help give you advice on the site. And if you want my outside in opinion at that point, it's like, this
Mhm.
is nice. They'll get a nice take rate, but how big can this market be? How does it scale? And I think what
Okay.
you've seen here is they've gone to, we have this marketplace. Oh, now we can sell you a dashboard that monitors your site. Oh, we can build you products that help you do this. So feels a lot more scalable, a lot better margins. And because I worried about a marketplace like that before, how fragmented was it? What's the supply and demand? Is it a place where you find that expert and you just hire them and take them off the site? So I didn't feel like it had a great marketplace. So here's a company that found initial traction and has kept them building away from it. They still have that marketplace, but they've enabled more and more tools, and it's enabled them to scale and have, my guess is, better margins and more stickiness. So again, where you start, what you find, again, always simple story. Start that wedge and then find a way to either go deeper in that wedge or find ways to grow and make a better product. And I think Fable's executed really well.
Yeah, a lot of the companies we talked about today, as you said, just tying back to that, like an idea, but obviously
Yeah.
evolution and growth and just
And
finding that wedge.
one last point that reminds me of, I think all these companies, unlike, let's say, 3 years ago when we talked about the big raises,
Mhm.
have real businesses. All of them have scaled. My guess is all of them have unit economics that work. All of them can show how they can deploy this capital, continue to scale, and they have massive outcomes. So the rounds are coming back together. I think what's happened in the market is there was a period where investors were scared to invest because they didn't know what the comps would be, and they didn't, and they had to, and lots of companies had to go show not only can we grow, but we're building real business that will generate cash flow. And now we're at the part where, hey, we don't know what a company should be valued at, and the companies that are raising now have real businesses and will take the money and scale faster. And
Mhm.
so I think the market feels comfortable making those investments again, and the companies have validated themselves. So all three companies here, I imagine, have great revenues, great growth, and great unit economics.
Awesome. Great way to close it off and a great first episode back after a while. I know we're saying it wasn't a while, but it was a little bit of time. But before we go, just some event announcements. And also, we announced our rocket ships list today. And two of the companies we just spoke about, Fable and EvenUp, made our list. So high growth, scaling, great opportunity to build a great career in tech at those companies. That's kind of what the list is all about, just companies taking your career to the moon. So we have a celebration tonight at Toronto City Hall. Please join if you're free. We've been promoting it on social. There's still space if you would like to bring your teams. Also, you'll be in Vancouver this week, Alex, for our
Yes, I am.
TechTO Vancouver event on Thursday, the 24th. So
And we'll validate some of my